How's it going, Forex traders? It's Carlos here, and in this video I'm outlining the guidelines for accurate technical analysis. Now, I love technical analysis because once you have mastered the skill, you can basically use it to analyze any financial market for a profit: the futures market, the stock market, and obviously the Forex market. However, the challenge the beginning trader can face when trying to analyze a market is knowing where to start out and what exactly to be looking for. Luckily, within this video, I will present to you the guidelines that you can follow to perfect your analysis skill. Alright, the guidelines include: number one, you need to identify the trend. Number two, you need to plot accurate support and resistance zones. Number three, you need to apply your technical tools. Then number four, you need to have a good understanding of candlestick psychology. Number five, you need to obviously apply the principles of proper risk management. Now, those are the guidelines, and to test those guidelines I will actually use a live chart today. The chart that I'm going to use is GBP JPY. So I'm going to be using GBP JPY to outline this lesson. So there we have GBP JPY on weekly time frame. Our first guideline is for us to identify the trend. And how do we identify the trend? We identify the trend by paying very close attention to the market structure, how the market is outlined. Now let's follow the outline of the market structure. Price rose down here, then price went up there, then it came down again, then went up, as you can see, came down again, went up, and currently where it is on the current week, it's coming down here. Now let me just turn this candlestick chart into a line chart just for you to see the skeleton of the structure. Now this is the outline of the market structure. You can see that the market on the weekly time frame is making a succession of higher lows and lower lows. That immediately gives us an indication that the market is bearish, meaning sellers are dominating the market. So automatically my mind is preconditioned to take a selling position. So there it is, that's the market direction, and we got it through the market structure. So our next guideline, we need to plot accurate support and resistance zones. Support and resistance zones are the price points where the price got rejected and reversed completely, repeatedly. Now take note of the word repeatedly. So for example, here price was rising, as I had drawn it, price was rising up to that point, it got rejected there and came back down. If I put a resistance zone there, you can see it's being respected. So price rose up there, got rejected, and also got rejected for a second time. Then if we go back in time, we see this resistance level is very significant, because even back in time it's being respected. Then we can do likewise for our resistance level. We see price got rejected at this point. Then if we go back in time, we see that zone is being respected. Can you see price got rejected there, got rejected there, and at one point it was a resistance zone. So we can say those are significant zones. And if we go on the daily time frame, for example, you will see the, can you see the red line there? Let me just, yeah, you can see the red resistance line there, and as we go back in time, you can see it's being respected there. So even on the daily time frame, it's being respected like crazy. So you do agree with me, let me just make it a bit smaller, you do agree with me that those are significant support and resistance zones. Now let me go back to the weekly time frame. There we have it. Alright, now that we have our support and resistance zones, our next step and our next guideline basically is to apply technical tools. And the technical tool that I'm going to apply in this instance is the trend line. I'm applying it because as you can see, price action is respecting it. Price rose up all the way there, touched the resistance of My trend line there came down, and it's currently working itself up here. Got rejected at this resistance level that I've drawn, and working itself currently down to the support of my trading channel. So you can see that the trend lines that are plotted on the chart have kind of basically formed a channel where the price action is contained. Okay, so there you have it. That's the technical tools that I've applied. Now the next step is important. You need to have an understanding of candlestick psychology. The reason why candlestick psychology is very important, because it gives you an indication of what to do. So in this instance, it's important because can you see the support level that we have drawn here, this one here? Now the market is closed, but price may be rejected at the support level, and then it will work itself up there, or it can just further continue the downward movement. Now candlestick psychology is what will help us to determine whether it will continue upward or whether it will go downward. Alright, how do we know this? A tip that I can give you is never make a trading decision so long a candlestick hasn't closed. So when the market opens, for example, let me go on a lower time frame. Can you see what's happening on a lower time frame? Price action hasn't yet passed that support level. So when the market opens on Monday, we're going to see where Monday will close off. If the candlestick on Monday closes beyond this point, then we know that the market will continue its downward movement. But if the market closes up above this support zone and continues upward, we know that we'll need to take a buying position. That is it basically. So the last one is risk management. Alright, risk management I cannot actually show you on the chart. Just be careful. Trade the lot size according to your account. Use the leverage that your account can take. Do not suffocate your account. Alright, so if you apply those guidelines consistently, or when you're trying to analyze a market, then I really can assure you, you're on your way to winning this game, and you're on your way to making a lot of money within this game. Alright, so there you have it. Those are the guidelines if you want to make your technical analysis as accurate as possible. This is Carlos Tina, so please click the subscribe button if you want to be notified whenever I drop out new content. See you next time.